FirstBank Nigeria has more than a century of relationships with key sectors in the Nigerian economy. So what would you say are the most promising sectors for investors?
Now, thank you. The resilience exhibited by Nigeria as one of the fastest growing economies in Africa in the last 2 years, in spite of the secondary effects of the global financial crisis, has been primarily due to strong performance of some promising sectors. Though faced with a myriad of problems ranging from inadequate access to credit, inputs, and operating at small scale, the agricultural sector continues to be a major contributor to the GDP of Nigeria, with over 41% contributions in the last 5 years. Trading is the second largest contributor to GDP in Nigeria and has consistently been increasing since 2007, estimated at about 18.5% of GDP in 2010. Next also is fast-moving consumer goods, which have been the major driver of trade's growth and is a reflection of the gradual expansion of the middle class with diverse tastes and sophistication. This explains why there are increased opening of shopping malls in major urban areas in Nigeria, like Lagos, Abuja, and Enugu, to take advantage of our growing middle-class population. Now, but with relative peace in the Niger Delta region, the oil and gas sector for the first time in 5 years experienced sustained growth in production. And I think we did actually surpass our 2.2 million barrels per day and actually contributed to GDP growth in 2010. With reduced price volatility experienced in the oil and gas market globally and the growing sentiment, especially in Europe, for cleaner energy sources, there is a huge potential to tap into Nigeria's efforts at exploiting its largely untapped gas resources. The power sector is a very viable area that such investors can take advantage of, given the gap between demand and supply in that sector.
Now, we've seen a wave of consolidation in the Nigerian banking sector since 2005. How has that affected FirstBank's market presence?
Thank you. Now, the regulatory-induced consolidation that happened in 2005 prompted banks in the Nigerian economy to raise additional funds from the capital markets to finance their growth plans. This sparked a strong drive for size, as every bank wanted to be the biggest bank. Some banks actually emerged as new major competitors, joining the traditional big three, which includes FirstBank as dominant players in the Nigerian banking industry. FirstBank and these new emerging banks, about 6 of them, controlled more than 65% market share of both total assets and deposits of the Nigerian banking industry. However, the competitive landscape was redefined further in the last 2 years following the regulatory intervention of the Central Bank of Nigeria to stall the capital adequacy, liquidity, and governance challenges faced by some players in the industry. Now, the regulatory intervention led to a major shift in competitive strength of key players, as some of FirstBank's key competitors were affected and they lost a major chunk of their customer base, some to FirstBank. Now, FirstBank and 3 other banks emerged thereafter as the leading banks, controlling over 49% of the total industry assets and about 45% of industry deposits. In spite of the turmoil in the Nigerian banking industry in the last 2 years, FirstBank has shown remarkable resilience in maintaining its leadership position on many fronts. FirstBank was rated the 12th largest bank in Africa on total asset basis by the African Report. On the domestic front, FirstBank is the biggest bank in Nigeria by balance sheet size today.
How has FirstBank Nigeria evolved to meet a changing market? What's your approach to innovation and product development?
Now, over the years, FirstBank has been proactive in responding to changes in regulatory and government policies, customers and competitors' activities dimensions that are key drivers of change in the Nigerian banking sector. We have invested heavily in information and communication technology to help us provide seamless world-class services to our customers. In tandem with our name, we are proud to be the first bank in Nigeria to be ISO 27001 certified. We have upgraded our e-banking suite of products to provide convenience for customers on any alternative channels they choose to transact businesses. We also have in place a conflict resolution and feedback tracking mechanism, which we call First Contact, that allows our customers to lodge complaints about service issues via various channels and get the issues resolved immediately.
And you've been a real pace setter in corporate governance in Nigeria.
Yes, we are. We have a proud history of leading the way in adhering to best corporate governance practices in Nigeria. We do operate a governance structure that ensures that the bank is managed in an efficient and effective way that guarantees creation of value for shareholders and meets the expectations of all stakeholders. The board and standing committees meet regularly, and the composition of the various committees are made to ensure transparency, independence, and adherence to the Code of Corporate Governance for Banks as codified by the Central Bank of Nigeria. Now, the activities of the board and its committees is also subjected to independent assessment by an external agency and reported in the bank's annual reports and accounts.
So finally, what are the need-to-know basics that investors should have about investing in Nigeria?
We believe the outlook for Nigeria is very positive. Our position stems from our analysis of the socio-political and macroeconomic trends in Nigeria in recent times. We also do believe the strong growth rate experienced in the past 5 years expected to be sustained in the medium term. The stable socio-political state of the nation following the successful elections had held earlier in the year, with continuation of economic reform agenda anchored on a private sector-led model, has indeed created a more conducive environment for investment in Nigeria. The decision of government to exploit the private-public partnership option in addressing critical infrastructural deficits, especially power and road, presents a very viable business opportunity that can be exploited by any would-be investors. The extractive industries, especially the gas and solid mineral subsectors, are undertapped opportunities in Nigeria.